Hello and welcome, ladies and gentlemen. Welcome to Nirmal. I'm Hiral Dadia. We have Kunal Shah, head Commodities Research, joining in. Kunal, my first question coming to you is especially with regards to what's happening with crude prices. We're back again that $30 per barrel mark. Now, yes, there is some bit of gradual recovery that's happening in fuel demand on the back of the partial reopening of the economies. Secondly, you have nations who've gone ahead and cut production as well. So that's something which is supporting. But what's the sense that you're picking up with all of this? Do you think $30 per barrel is going to be the next base?
Yeah, so we had been saying that the June contract tests, 28, 30, 23, 2400 levels is already what we've seen today. So maximum upside for the June contract, as per me right now, is 2500. So I'm
Hmm.
not expecting a sharp run away from present levels. Whatever recovery we are seeing in oil prices is on the back of simple calculation that the oil surplus, which was 25 million barrels per day when the crude prices hit a negative territory on last 20th of April, and in a matter of 1 month, the surplus has gone down from 25 to 9 million barrels. So drastic reduction in the surplus, and lockdown is getting relaxed in Europe, in some of the countries in Europe, even in some states in US. So that is sentimentally positive, and some bit of demand is going to recover because of the relaxation of lockdown. But oil prices have already factored all this into
Hmm.
them,
Hmm.
and we've seen going to be very bullish in crude oil from present level. So whatever I was expecting, we've already seen that. I was expecting this to take place in the mid-June, but
Hmm.
markets of everyone, and already we've seen $30. So maximum 31, 32 on NYMEX. 2500 are the levels where you can, think about taking a contra bet right now. But wait for the triggers rather than going it long. You can play the upside till 2450, 2500. Above that, I don't think so. It's going to be very bullish. And because the way oil prices have steamed the momentum, even natural gas can recover a bit, but I'm not still very bullish on the commodity. So prices can bounce back to around 135, 138, but nothing will above that.
Right, so Kunal, are we trying to say that the $30 currently is the new $100 that we would have ever seen earlier?
Yeah, for Brent, $40 is new $100. For WTI, $35 is going to be new $100, because
Hmm.
these markets are not something, it's artificially controlled. So artificially, when you take the production out, so I have not seen a production cut from OPEC as big as 10 million barrels in my whole life. So whatever is happening in crude oil, it's all happening for the first time. We've seen it going below negative territory, the way Saudi and Russia in the month of March, the way they decided to increase the production. We have not seen that. And this also, we have not seen that after hitting minus $40, prices are back to $30. So from the downside, we've seen the upside of almost, from $5, $6 June contract, we are seeing it back to $30. So this
Hmm.
is tremendous, and there is no reason why one should structurally go long in oil at this price, 2450, 2500. Till that levels you can remain long. Post that, I would not recommend to remain long.
Right. And Kunal, with the kind of frantic sell-off that we had seen last month as well, do you think there is a possibility that oil prices could again go negative this month? Do you see that as a vague possibility as well?
No, I don't see that happening, because I cannot say that it will never happen or it cannot happen. It may not happen because the surplus has reduced. So last month, OPEC has not started the production cut.
Mm.
What is the difference between last month and this month? The production cut by OPEC and US. So totally 12 million barrels of oil is being taken out from the market in a matter of last 30 days. So that's why markets may not go into negative territory. But if the lockdown is lifted up and the coronavirus second round begins, then I think again there will be a lockdown, and then again oil prices will go down. But till now, it's not the case. So let us stay in the present. If we are not having the coronavirus threat uh, for the second round, then I think prices may correct, but may not crash the way it did in the month of April. And that was a double black swan event. That is not something, no one foresee that.
Correct, correct. Okay, so now that we've spoken about crude and the setup behind it, what's the sense that you pick up with regards to gold as well? Because both crude and gold are facing different fundamentals. Now, on one side, if you talk about gold as well, a lot of factors that have been impacting crude, and that's one of the reasons why we're seeing traders who are encouraged to go ahead and park their, surplus in safe havens like gold. Because if you talk about gold ETF, which is SBTR Gold ETF, they have witnessed flows that have reached the highest since June 2012. What is this data actually suggesting? And I know you've always been pretty bullish in terms of where gold goes, but from here on, we've hit new highs in today's session as well.
Well, first of all, the why gold shorter, what happened, what changed during last week. The main thing change was the language and the outlook given by the Federal Reserve. So
Hmm.
Federal Reserve is warning the markets that the things can go pretty nasty even from present level, and the U.S. economic crisis may deepen going forward. So I'm not. I'm of the view that the structural strength is likely to continue in gold. Number one, in last week the ETF holding of gold bought gold out of the foreign reserve. Russia's foreign exchange reserve increased, and out of that increase, we have seen gold prices also moving up. Apart from that, the another last trigger, which was indicating very bullish, Trump started to talk about negative interest rate. Now, just imagine that in last 2 months, $8 trillion has been infused in the broader financial market by the central bank. So, what does it mean for people like us, people like you, me, and everyone, viewers? The money which we are having in our bank accounts, the value of that money is declining with so much liquidity is getting printed. So with so much liquidity getting printed, the value of money in our bank account, our saving account is declining. And hence, it is good to have a gold in this kind of times. Because when the value of paper currency start diminishing, it happened in 1929, 1930 in the era of Great Depression, where people had no food, people had no essential items, and at that time they had to burn currency to lit up their stove at home.
Hmm.
This kind of scenario, we hope and pray it doesn't come, but at that time the value of gold increases and then the price follows up. So I think right now this stronger momentum may continue. Not wise to go short in gold right now. And 48,000, 150, 200 are the levels what you can see during the intraday trading session.
Right. And with regards to silver as well, because we are already at a 3 month high now, it's slowly paying the catch up rally. Is it the supply crunch that is pushing silver prices higher from here on?
Correct. If somebody would have bought silver and sold gold, they would have made money. That 20 rupees spread they would have easily made out of this ratio. Gold was at 47,000, 46,000, and silver were at that time available at 42,000. So this mispricing could not sustain, and we saw the buying coming in. As far as production is concerned, yes, the secondary production of silver, which comes mainly from zinc and lead mines.
Mm.
So a lot of these big zinc mines started to cut their production. So because of that, we've seen even silver secondary mine production, which accounts for 35 to 40% of the total silver production, is going to get impacted because of this. So hence silver is also looking good. Is poised to do well, and I don't see any major weakness or any major correction in silver. So I am still bullish on silver also.
Right. And what's the sense that you have with regards to where base metals are concerned? Because China has almost opened up. You have the auto industry, which is slowly started to open up in India as well. But taking these cues, do you have any bets in terms of base metals? Where would you look at? I mean, what base metals would you look at?
Okay, in base metals, one must understand what changed. China from last 10 days, the entire China is resumed working normally. Wuhan, which was the epicenter of coronavirus, it is having a population of 11 million people. Out of 11 million people, 3 million people have been tested for COVID second time. So it is aggressively doing the testing and preventing the crisis, taking preemptive measures. But at the same time, the economy is opened up. 50% of the consumption is coming from China. So we saw the lows of 398, 99 in copper, and it's back again 406. So 410, 411 are kind of levels where we see copper can go. Zinc can go up and test levels of 58, 59, and nickel can go up and test levels of 930, 35. So moderately bullish right now, mainly on account of the data which is coming from the China, and hence metals may extend the rally.
Right. Kunal, we have a couple of questions pouring in as well. Uh, in terms of the first question that we've received is, can we make sell positions in crude oil around 2,500? That's coming in from Ramesh Thakur.
Yeah, so yes, I would say that slightly contra view. You can make a sell position at around 2,500 and expect prices to decline and test levels of 2250, 2300 there onwards. Keep a strict stop loss. Whatever recommendation I'm giving, keep a strict stop loss around 2590, 2580 between those levels. And I think prices should go down after that. So I would recommend that one should take a contra call after it reaches 2500.
Right. And I think that question remains answered here as well. You have Abhishek Chakrabarti who's asking that if there is any correction due in crude because clients want to invest in crude, which level is better?
Yeah, so technical levels, I'm not an analyst, but my view is that investment opportunity we already had, but at that time we couldn't buy it because we had our own issues also that we banned the contract. And after that, we've seen June contract rallying from 34, 13, 1400 to almost 2500. So I think level should be the kind of humongous rally what we saw. The moment it starts again going down, it can test levels of 2200, 2250. I think those levels you should start considering making long position.
Right. Apart from that, another question coming in is gold has almost achieved $1,800. Can we see any kind of correction on that front?
Okay, everyone is waiting for correction in gold. We did saw correction. We said that we can see some profit taking, and gold prices corrected from 46,800 to 46,000, 45,400, 500, and again it bounced back to 48,000. So the thing is that selling in intraday doesn't make sense because of the kind of news flow we've got. US jobless. So 15% of the US population are now jobless officially. Forget about the unofficially. 15%. And this number was 3% 2 months back. The total unemployment in US was 3%, which has rose to 15%. Jobless claims are at record high rate. Retail sales are at lowest rate. So right now, just because there is so much fear, people are buying gold ETF, and hence gold is not coming down. So you can see some bit of correction, but I would still not recommend to go short. I would recommend to go short once the prices rises abruptly from here. At that time, we can think about it, but don't short it right now.
Right. And another question coming in on the currency front, Kunal, whether someone can short dollar rupee at this level.
No, the fact remains is that whatever economic stimulus package what we had and everyone cheered about, so everyone has been waiting for the fine prints of that stimulus. And when you go through the fine prints, I was little disappointed that a lot could have been done in terms of direct QE to the economy, but whatever we got, we have to remain happy with it. We are not the policymakers, so I think government is definitely going to miss on the slippage front, and hence don't go short in USD INR. Buy at dips. Make that as a rule or strategy. Anytime, I explained earlier also, 75, 75, 10, 20, great level to go short, a great level to go long. And once it moves up, then we can short. But I think now the trend is little up. Don't short right now.
Right, not the time to short right now, at least in terms of where the currency goes. I think, Kunal, these were the questions that all our attendees also have. Thank you, everyone, for joining in. Thank you, Kunal. In fact, there's one more question coming in. That's the last one that we could take probably. What are the higher levels of gold and silver according to you?
Okay, I would like to address this question by telling everyone it's my request that we have a good attendance today. I would like to show something. One minute. Abhishek, can you please share the screen? So I'm not able to share the screen, but we have come up with
You can try sharing
this
the
three
screen,
reports. So
Kunal,
we have
now.
started. Yeah, yeah. I'll just show. Disable attendee screen sharing.
You will be able
So
to share.
we've started one. No, I'm trying. Yeah, got it. So I'll just show you guys. Just have a look at this. So we come up with this report on the on gold bullion, and that report is 1 minute. I'll just share with you all. I think that report may have got deleted by me. So it's a Indian Bullion Jeweler Association's report, where every day we come up with a 4-5 page report on gold. So if your clients are, if your clients are trading on bullion, please make sure you all go through that report. In that we give extensive levels, chart view, fundamental view for gold and silver. So Nirmal Bang has proudly tied up with the 100-year-old institution, the institution which is basically providing gold AM PM fixing in India. So all the ETFs are basically taking the rates from this organization. So our research, we are sharing, we have become a knowledge partner with them, and we are sharing our report with them. So we release this report every day, and we put it on our groups. It's called IBGA report, IBGA Gold Silver report. Please refer to the levels. In that we give extensive level. We are doing a lot of hard work to make this report available every day. So I would request you to go and visit the report and see the level rather than telling you a level on screen.
Absolutely. I hope that question remains answered. And there's a request coming in, Kunal, saying that if the LME data can be displayed on the ODIN, Odin.
Yeah, so we are previously doing that, and we are previously flashing it, but a lot of people were not okay with that. So it is an area of conflict. So a lot of people are not right. So they are doing trading, because at that trading in the equity market is pretty vibrant, and suddenly you get flash on all terminals. So that is disturbing for them. So I will speak to the management regarding the same, that whether we can restart it. I have to ask other people also. Can I ask which region wants this data? So I can talk to IT guy and say that we can provide it or not. Region specific messages. Which region are you from, sir?
Pune.
Okay, so I'll get back to the regional head of Pune, and whether we can flash it LME on screen or not. Yeah.
Right. And very lastly, Anup Sinha asks if there's any particular commodity which you see as lucrative from here on for short or long, apart from the ones that probably we could have spoken about already.
Well, there are agriculture commodities. May I think CPO by a decline. India may the moment this kind of scenario is moderating, the edible oil shortage will be tremendous. And right now, because the hotels are closed, the entire economy is on a lockdown, so the demand is down. But I think 2 months down the line, since there are no imports taking place, there will be a shortage in this commodity. So this is the commodity which can go up by 4 to 5%. Another commodity which what we discussed, Anup, and I think with strict stop loss for intraday gold also you can buy. You can expect 200, 300 rupees upside from present level also. And I think I don't have much other much commodity. Guar seed can witness some bit of pullback, 100 rupees pullback in the prices in next 1 or 2 days. So that's all I have. But the view is 2500 tak crude mein long you can remain. Gold still can go up during the evening session. And metals, copper also you can buy for 4010, 410 or 411. That kind of levels what you can see in today's evening or maximum tomorrow morning session.
I hope all the questions are answered as well. Thank you everyone for joining in. Thank you, Kunal, for responding to all the viewer queries as well. We will come back to you now day after tomorrow, which is on Wednesday at the same time, to look at the commodities market more in detail. Thank you very much.